I think AI is going to take a couple years to really do what everyone's saying it's going to do. And right now, AI is a huge trend in investing. And people will say and do just about anything to hop on that wave.
Okay, everybody, welcome back to another episode of the Brainiac Blueprint, where we discuss the intersection of AI and how it impacts business and the world around us with our esteemed guests. I'm Kyle Lambert, founder of Left Brain AI and Action Hero Marketing. In today's episode, we're going to discuss how you can cut your upfront costs when closing on real estate. With that being said, today's Brainiac is Jesse Strober. Welcome to the show, Jesse.
Thanks for the intro, Kyle. I really appreciate you having me on today.
Of course. Yeah. I'm looking forward to our conversation. We met at the Red Awards in New York, I guess a couple months ago at this point. Everybody was looking fancy. We were looking good. Did a brief interview there. Figured let's dive in a little bit more. So if you don't mind, tell everybody who you are and what SnapRent does.
Sure. So like I said, I'm Jesse Strober. I'm the founder and the CEO of SnapRent, a property tech company based out of New York, but we do cover some other states out here in the Northeast and are expanding to Florida as well. SnapRent removes the upfront costs for renters upon moving in by providing financing on security deposits and broker fees. So we work with properties to create this offering. It accelerates their leasing velocity because they're allowed to market much lower costs, typical supply and demand. And for renters, it gives them a lot of flexibility in how they manage their finances during their move. You know, in New York, the hardest part is finding an apartment in the first place. And preparing financially for that move is an unfortunately significant component as well. The average moving cost just upfront in New York, I think in 2024, was around $13,000. So it's a lot of money, regardless of how much you're making.
That's crazy.
And that generally involves liquidating some assets, drawing from savings, changing some of your, spending habits, what have you. And our goal is to change the perception of renting, especially in light of the FAIR Act, which has removed required broker fees, to just paying another month of rent. When we sponsor or finance a deposit, the renter just pays another month of rent, just like they're usually doing, and they get to spend most of their time focusing on finding the apartment that they want to live in. And then our payment plans are flexible, and we can get into the details later. So that's the high level.
Very cool. Yeah, I think real estate is obviously something that everybody can resonate with, and the increasing levels of cost. I remember, I feel like a lot of people like myself like to just kind of shop around just because, it's interesting to see. And I remember being on Zillow, and it was like 2022, you just see the cost go like this. It wasn't even like diagonal, it was just vertical. And I'm exactly. What are we doing here? Right. So it's nice to have some flexibility from an organization like SnapRent.
Exactly. I mean, the thing is that it's been well known for a while that there's a huge housing shortage in the US when it comes to purchasing homes. And there was a short term during COVID where the mortgage rates were outrageous. And everyone who bought a home during COVID is in no rush to sell, and they want to hold on to that mortgage rate. But that said, I would say the upsides of owning are often less than people imagine. There's a lot of maintenance, a lot of taxes that are involved, and renting is I'd say a financially responsible alternative for the majority of people, even if they did have the funds to buy a home. So we would just want to make renting as efficient and easy as possible for customers. I always hate to hear people feeling so disenfranchised because they're thinking about the 70s and how easy it was for our parents or grandparents to buy a home. But the real issue is that rents and specifically moving costs are high. It doesn't mean that it's worse than buying a home, but we just want to make that aspect easier for everyone who's living in expensive cities.
Awesome. Well, lots to unpack there. But before we do, as you know, I like to have my guests finish the prompt, I think AI is. So if you could give me that response, that would be great.
I think AI is going to take a couple years to really do what everyone's saying it's going to do. And when I say that, I mean really replace a significant amount of the workforce, really fully replace extensive tasks. We have all these agents. There's a lot of buzzwords that are used. And I'm from the Bay Area originally, very exposed to the venture capital community. And right now, AI is a huge trend in investing. And people will say and do just about anything to hop on that wave. But in reality, a lot of this technology is either not necessary for the problem that people are approaching or overstated in its use of AI. So I think AI is still in its nascent stages rather than us kind of starting to reach some, getting close to the peak.
I keep equating it. We've seen this before, right? So most recently with the crypto boom, there was the internet boom, and the dot-com bubble and all that kind of stuff. You see, every person has one of these or brings some kind of organization or tool or whatever it is. And then 95% of them fail because there's no utility, there's no actual value. And the ones that actually work rise to the top and stick around and continue to grow. So I agree with you wholeheartedly. I fully see that happening here with AI. Yeah. All right. Awesome. Great. Well, I think this sets the stage. Let's jump back into SnapRent and your background. So when we originally connected, I know that you have done some stuff from AI, and coming to SnapRent was quite a pivot from your tech background. So if you don't mind, just letting everybody know kind of what you were doing before and what is your why for pivoting and starting up with SnapRent.
Sure. So I didn't mean to lay myself up with my last answer because, we are going after a problem where AI isn't the best solution. But my background is actually in AI. I studied the major no one knows about. It's called symbolic systems, but it's an artificial intelligence major at Stanford undergrad. And then I was studying computational sociology, mostly with AI methods, in grad school, also at Stanford, and applying that to job networks and seeing how we could kind of push forward career progression and just figure out which skills would be best for people to advance in their career, different interesting experiments like that. And when I finished school, I was a technical product manager for a company that made AI recruiting software. So what we would do is essentially we were on the sourcing side of recruiting. So it's the very top of the funnel where we're going out and finding people and matching them to jobs. And, there's a lot of that has to do with data, but I was frequently working with the head of AI there with actually the predecessor model to what ChatGPT and the big LLMs are now. It was called BERT, and it was one of the first models that were successfully using these things called transformers. And it's a little bit too technical to be talking about in depth, but transformers are what make large language models what they are today and why they're so useful. So that's my background. And what led me to SnapRent was just a problem that I had from personal experience. I think I grew up in a very entrepreneurial community, both before and during Stanford. And, I knew that I wanted to start my own venture at some point. So I was always paying attention to different problems around me and potential solutions. And when I was living in San Francisco after graduation, working as a product manager, I was living with 5 guys that I grew up and have known for about my whole life since I was 5 years old. It was a great situation, a super, super fun group of guys. And every time we would move, one person would be in charge of the deposit, but the group text would be like a hyena pit. Where's the deposit? Who's in charge of the deposit? We need that money. We need that liquidity. And the guys that I was living with were honestly in pretty fortunate situations for being very young professionals. If they were in consulting, they were at BCG. They're at the top of their kind of game for their age. I was lucky enough to have a very solid role as a technical product manager in a good startup that ended up getting acquired. If someone was in tech, they were working for Apple. So these guys were making a good amount, a relatively good amount of money
Sure.
for our age, but we were still scrapping for this liquidity upon our move just because of the way people manage their finances. And it wasn't that we were irresponsible, but people are depositing in 401ks.
Yep.
They're, you don't want to take out of that. They're also putting in personal Roth IRAs. They have some emergency savings. They go on some trips. They have some investments. It's not like they're hanging out with $50,000 in their checking account.
Right.
So I thought this was an interesting issue, and I just noted it, didn't think too much more of it. And then about 6 months later in Uber ride while I was on vacation, a potential solution that is our core solution now just came to mind. It was kind of a what if situation. Like, why don't they do this type of financial structure? And the financial structure that we offer for our deposit loans is a little bit different than your typical buy now, pay later that you'll see with companies like Klarna and Affirm. It's more advantageous for a few reasons. And if you want, we can talk about that, but people can also just check it out on our website. But that is the origin story. It was really a personal experience. I thought it was a good problem, but nothing that I was chasing after immediately. And I thought the solution I came up with was good enough to at least getting into the vetting cycle to say, all right, is this market really worth going after? What exists out there? And that was a few years ago now. So it's been a quite some time and a great journey since.
Awesome. That's great. Yeah, I love hearing the entrepreneurial origin story. I feel like the back of the Uber aha moment has become the new shower thought type of thing, right? So it's interesting to see how that's all played out. I'm curious. You're a couple years into this now that you know what you know. Is there anything that you would do differently? Or what would change going from that aha moment in the Uber to now?
It's tough. It's tough to say in our circumstance because we are technically lenders and it's a highly regulated industry.
Yep.
And where I come from, the mantra is getting out a product as soon as possible and iterating very quickly, shipping and iterating very quickly, getting feedback, making adjustments, and not planning on sticking with your original, dream idea and things like that. And, startups do have sometimes some flexibility with getting away with some compliance shortcuts and things like that. But especially in consumer finance, it's a very sensitive space. And we also care about taking care of our consumers. There's some rules that are super dumb that have no influence on how well our consumers or our users are treated. They're just old school rules. For example, we have to have an office with a paper shredder and a fireproof file cabinet, although we use no paper. We are completely remote. So
that's so funny. I love that.
Yeah. So some things like that. But in retrospect, I think that the biggest thing I always recommend to everybody, whether or not they're actively working on a company, is setting up their sales infrastructure, or you could call it marketing infrastructure too, for getting outbounds out earlier. You always want to be talking to as many people as possible, especially if you're new to a space. Real estate was new to me. Finance, I had some exposure to, and I'm a numbers guy. The biggest part about AI is numbers and statistics. So, I had some experience with that. But, you always want to be talking to as many people as possible that are in your space to learn from them, to connect with them. It's not just a networking thing. It's more about, at the very minimum, learning what you don't know. It's very important to know what you don't know as a baseline. And then, the real estate space is complex, and it's going to, it takes years to really learn the nuances. Every city is different with their policies, but the one thing I think I would have done differently was kind of established a really robust sales infrastructure earlier on, even if we're not quite ready to sell our product. even if we didn't
Hey, I
have
mean,
something on the market.
yeah. Hey, like you said, there's really, especially when you're a startup, there's no such thing as too much exposure and too many conversations. And to your point, I think for me as an entrepreneur as well, just having conversations with other people has made me realize, oh, I don't know that much about this, or I don't know how to service this as well as I thought I did, or whatever it is, and it makes you level up real quick when you're having that face to face conversation. So that's interesting. I wanted to jump back quickly to the compliance stuff because early on in our conversation, you had mentioned you're only in a handful of states. So do you have to go through state by state and kind of get some kind of accreditation or something like that to be able to service people? Or is it just you're focusing on these areas and dialing in your process and then expanding out more?
That's correct. So we do have, state to state compliance.
Okay.
And that generally comes in the form of lending license regulations. New York happens to be very friendly for us, especially with the rates we're charging. They're relatively cheap.
Mm-hmm.
We actually do not need to have a lending license, and it is a long process to get a lending license in New York. We're not one of these consumer finance companies that are charging excessive rates, really exploit the customer. That's generally how fintechs, have developed a bad reputation. So we're well below what you would call the civil usury rate. That's the highest rate that you can charge without having a license. But most other states do require a lending license. So the states that we're expanding to now actually do not require a lending license up to some level. In Massachusetts, that's 12%, which we're applying for a license for. So we can charge a little bit more than that. In Florida, we're clear just like New York, same law as New York, and same with New Jersey. So those are the states that coincidentally, they're great for us. I mean, New York is very expensive on the consumer side. Same with Boston. Boston, they have a lot more flexibility in what they can charge up front in terms of last month's rent. They recently had some legislation similar to the Fair Act here in New York that removed the broker fee, which changes kind of the cost pressure dynamic. And then South Florida is very expensive as well. So, all the states that we're in are definitely in our target market, but we are starting here for a reason. Like I said, I'm from California. I wish I could have started out and used some connections and my network out in California, but California is actually the worst state for us. And it is going to be a long road to get there. But just for, I think it's also just relevant for context. The majority of fintechs, the way they work is they raise a venture capital round and they work with what's called a sponsor bank. And a sponsor bank gives them compliance in all 50 states and essentially an unlimited line of credit, which they're able to use to originate loans. But the company doesn't make practically anything on that. So they rely on really hyper scale. And that's the business of venture capital anyways. And this is a very interesting opportunity for me coming from that community. I'm very accustomed to the venture capital kind of fundraising style to create a business with stronger foundations where, we really don't need that capital. And it does require us to do compliance on our own as we're, getting licensed in Massachusetts right now to charge, the rate that we normally charge and not dip below. And we're getting licensed in Washington right now, and we'll gradually expand state to state. But generally, this is a different path than the majority of fintechs to manage compliance.
For sure. Yeah. I mean, you're the smaller shop, got to be nimble, kind of figure out your way to kind of weave in and get your level up, if you will. I'm curious, what is your competition like? Are you dealing with some of these like larger banks and do they offer a solution similar to what you guys, or are you pretty, kind of niche and unique and only have a couple of guys? And I guess if so, what is what differentiates you guys? What makes them say yep, SnapRent is the right move for me?
Sure. So our competition is not actually banks. These banks that I was referencing are kind of the bottom layer of the other fintech companies, but the companies that actually address this space, it's not a new I'm not the first person to realize that moving is expensive.
Yeah.
That's for sure. So our competition is actually composed of pretty much all insurance companies,
Okay.
and they operate with a model that is called a surety bond. But the details there, I'd say in sum, it's a type of insurance. And what happens is the user does not pay a security deposit at all. The property does not receive any cash up front. And the user pays a premium, an insurance premium that actually covers the landlord. So it's a very unique type of insurance because usually when you're used to the type of insurance where you break your arm and your health insurance will pay to help repair your, fix your arm up in the hospital. If
Mm-hmm.
you crash your car insurance comes and helps you out in fixing up your car. But this type of insurance does not protect you from the damages that you make in your apartment, if any. And one of the reasons that they do this is because it is less regulated and it is essentially easier to convert customers sometimes because they have a slightly misleading premise. And I don't mean to talk poorly upon the other companies out there. Some of them, I really appreciate the approaches that they've taken. But
not everybody's the most ethical out there, so we know how that goes.
Yeah, I mean, you can go look at reviews. Is all I would say. They're not spoken highly of. They're definitely not spoken highly of. And most importantly for us, I mean, our flagship product, like I said, it really helps renters, and renters are a huge part of our company. But in the long run, our goal is to partner with properties, property managers, anyone who has a stake in multifamily rental leasing, to make their process more efficient. And our first product is great because it's helping all parties. But our true, partners in the long run, the ones that make this possible for renters as well, by getting it in front of them, because market just pay. We can't just pay for unlimited advertising to make sure everyone's aware of this. So the partners are making sure this is available for renters. These companies, when the insurance companies, also cause issues for them because now the property essentially has to change their operating model, where some of the deposits they're dealing with are cash. Some of them are these weird insurance policies. Now they have to pay attention. Okay, wait, is it this or is it that? They have to have a more complex tracking system. They have to start filing claims. And these companies try to make it integrated. But now there's a whole different kind of issue that they've caused for the properties by solving a separate problem for properties. Properties have the problem of not getting people in fast enough. Okay, these companies have approached this in a similar way to us, but by doing so, they've caused a whole lot of problems for both the properties and the consumers. And our more direct method avoids the complexities of that. For the consumers, it's more straightforward. It is very clear what you're getting, what you're paying for, what the benefits are. And for the properties, they don't have to change their operating model. They still get the cash up front. They manage the security deposit like they normally do, and then they can give it back. But at the end of the day, they're able to offer lower upfront costs to their renters. And for the renters, that can be a great solution.
That sounds great. So are you, in terms of your marketing, are you guys going out direct to consumer and just trying to say like, hey, are you looking to move, like reach out to us? Or are you partnering up with landlords and these different, buildings out there? Or is it a combination of both? What's the main play for you guys?
So at the time being, we're focused just on partnering with properties. We have some big brokerage partnerships. But properties, property managers, developers. But we really do feel strongly about creating a positive brand and a positive brand experience for our users. Sure. So this coming year, we'll put a much greater emphasis on our social media presence, different activities outside of social media, making sure we're engaged with college students and making sure they know that this is an option when they're making their first move. They just got their first job, but they might not have a ton of liquidity. And then also for, people in their later stage, as long as they're, still in our target young professional age range, we do want to have a consumer side, but we're not going direct to consumer very much. That said, when you're getting off the ground, you got to do you have to, as a founder, you have to put boots on the ground. So I was hanging out outside open houses and talking to random people on the street, telling them about my product. And I'll tell you that door-to-door sales is difficult, let alone door-to-door sales for a financial product. It's not the easiest thing in the world. And some of our first users came from that, and it took a lot of work, and it paid off because we also met some of our original brokerage partners as well. So we started off doing direct consumer in that sense. But I'd say our primary kind of marketing or distribution path is through our properties. That's the best way to find people who are in the process of moving.
Of course.
And the kind of the reason why we don't kind of have a bigger balance there as well is that if you just choose 100 people, randomly on the street, what percent of them are either in the process of moving or about to move in a month? Right. Not very many. So, we can try to target them. But it's more just about brand awareness. We want to make sure that people know about us. We want to be partners to them in renting. We try to provide other benefits to them, like discounts on moving services. We have partners with Piece of Cake here in New York, which is the most well-known moving company. It gets pretty good reviews. And then try to partner with other companies that help renters. That's really what we want to do on the consumer side.
Very cool. I respect the hustle. You're right. It's not easy going out and just, talking to people and letting them know like who you are and everything like that. But, you get, it's a digital world, but still that face to face, like, it's like, if I'm going to trust somebody from a financial standpoint, all right, I met Jesse. I know he's a real guy. He's not BSing me. Again, it's a hard life, but I respect it. But I will say, it sounds to me like you need a little bit of marketing next year here. You can reach out to the Action Hero gang here.
Exactly. We do want, like I said, we do want to step that up. But that early work that I think all founders should be doing. You're not always going to find your customers on the street, depending on the type of business that you're doing. It leads to some good stories. There's some really funny times where I started talking to one person, and suddenly it seemed like I had 10 people listening to me at the same time, and I started preaching my product in the streets that doesn't even exist yet. I'm like, all right. So it's really important to be in touch with the consumers and making sure that what you're offering is not only a good solution, but a solution that they want as well. So throughout the life cycle, and you hear stories of the Uber CEO taking or rides or being the driver of an Uber or doing some shopping experiences himself. Mm-hmm. So I think that's it's not an original idea by me, but it's important throughout the real journey to be really closely in touch with your users.
Very cool. All right. I want to pivot slightly. And let's tie in a little bit of tech and a little bit of AI here. Okay. So I'm curious if you have any integrations at this point, and if so, how it's being used, and if not, is there anything, or even if so, is there anything on the horizon that you're planning on bringing into it, whether it be internally to make you guys more efficient or externally as a feature or something like that for some of your clients?
Sure. So our external product is not AI related, and the new products that we're coming out with as well are also not AI related. At the end of the day, we're mostly a financing company. We want to make sure that our products are accessible in a clean and beautiful tech system, but these tech systems are not the most complicated in the world. It really comes down to the financial and legal structures that back them, and that's why we're able to make some great product offerings for the consumer. But that said, one of the biggest changes that AI has brought in the entrepreneurship community is the ability to scale in certain ways that weren't possible before without hiring a larger team. And headcount is always the most expensive part of any company as you get started, at least. And we use AI very frequently in our ability to, I would say, in our sales cycle in our sales operations, whether it is gathering data on prospects or fine tuning some of our reach outs or summarizing, notes and next steps automatically. We also have several things in the works where, we have a bigger team now. It's not just me, I was a solo founder to start with, but we have a bigger team now. And like I said, real estate is complex. So we want to have automated systems that are constantly giving real estate updates to our team that are a compilation of what you see from, the great real estate newsletters out there. And, we're not selling this, by the way. So I don't think they're going to have an issue with it. It's all internal. But things like that, we want to make sure that we're using AI to properly, process the available information at hand, distribute it internally, and then also kind of accelerate some of the processes that we do on the sales and the marketing end as well.
Very cool. That when you and I were emailing back and forth, if I remember right, I feel like I remember seeing something about was it Snap GPT? Is this a custom like GPT that you guys built or something like that to kind of accomplish these things, or am I just making things up right now?
We definitely have custom GPTs. Okay. That's I'd say very important. I think one of the biggest things to note is that GPTs are not great at matching your tone. So I don't recommend that people, especially I'm an expert in personalized outbounds. That's really important in recruiting and sales as well. That's really something that I have a lot of experience with, both these matching systems and these personalized outbounds. I do not recommend just spamming people with, pretty much completely AI generated outbounds that are compilations of data that you've picked up. I think that AI can be really good in kind of sorting through your data and identifying points that might be relevant while you're writing an email. Or if you have a template and there's a suggested line, that's great. But I think right now, when it comes to writing, there's there needs to be a human in the loop. So, for example, we'll have an AI system that generates emails automatically. It usually won't change, stray from our template much. But if there is a specific point that needs to be brought up, I'll receive an email, for example, from our AI system asking for approval that this is a reasonable thing to be talking about. Usually I'll apply a few edits and I'll shoot it out. But it's not great at tone, and in such a relationship-driven business like real estate, I wouldn't recommend it. Sometimes, I don't want to say that is the same for every industry. I don't want to discourage people from, moving fast. And if you're an early startup founder and need to move fast, there's nothing wrong with trying things at all.
Oh, yeah.
But we do have our custom GPTs for a variety of things. We have GPTs for financial and legal strategies, just because our products are very complex on the back end. Super simple for the users, but in order to provide these types of products, there's a lot of financial and legal structures that we have to walk through and make sure they're working right. So we have GPTs that are specifically set up for that. We have GPTs that know our brand language and can help us generate consumer or client-facing materials. We have several that are, I'd say, designed for purpose-built, depending on the function that they're serving.
Very cool. Very cool. I think it's interesting because you obviously have a different background from, I would say, a lot of, like fintech type of founders and CEOs, know the ins and the outs of AI and how it can be used, how it should or should not be used. So I'm curious, internally, do you have conversations with your team and say, don't use it this way, or, are you thinking deeply and setting SOPs to mitigate risk and make sure you're being ethical and all that kind of stuff? I'm curious how you're approaching it.
Yeah, I think I'm the most experienced or have the most background in AI on our team. And, I think the main point that I tried to drive with my employees and my coworkers is that, AI is very good at some things and not others. And you really need to think about what it is good at and how it is best used. And it's not always right as well. So there's certain things that, there's a lot of public information about this, but, it's great for brainstorming or getting a first start. But for my company, I actually tell people that that's going to hinder your creative process. You need to do some brainstorming first, and then you can have ChatGPT, help out afterwards. But you don't want to you don't want to bias yourself based on the ideas that this robot had, or you're going to be limiting, how your thought process is going to work. And then you also, don't want to, say overestimate its capabilities or knowledge, and how it pulls from the internet. At the end of the day, it is a large language model. It is very good at gathering language and reformatting it and spitting it out. Mm-hmm. But you have to be very careful, even when you're using some of the fancy new features, about the data that it might be leveraging if it's answering something based on the internet. Have these things changed? If you're asking something real estate related, make sure that this response is kind of considering the most recent policies in New York. It might be completely irrelevant given that this one policy got enacted last year, and you can make sure that the systems are up to date now, but they frequently pull data from the past. Just for not kind of off topic from SnapRent, but I'm a part of, I don't know if you know what a Survivor League is for football.
I do. Yep.
I'm a part of Survivor League, and one of my Survivor League tests is having an LLM do all my picks, and I'm winning. It's going great. It's human in the loop, but
that's incredible.
It has occasionally messed up. The reason why I can't let it go on its own is because it's saying, pick this matchup for this week. And then I look and I'm like, that matchup isn't happening. That matchup happened in 2023.
Oh my God.
So it's important to know what it's good at, know what it's not, and think deeply about how you want to work that into your process. So we definitely provide recommendations internally about how to use it.
I love that you're doing that. I'm in a dynasty football and a dynasty hockey league. I'm a big NHL guy, and there's so many more stats in the NHL. Exactly. Yeah. I want to kind of like program something that says like the value of each skater across our 12 stats, like not just focused on goals, right? It's going to happen at some point. So I love that, the Survivor thing, I think is an easy introduction, like a gateway, GPT into the sports world there. So it's going to happen. I'm not too far behind you.
Yeah. It's funny how well it's worked out for me. I mean, there's always random chance, but, people are saying, I think we got confused with the picks. Let's just call it and, give everyone their money back. And I'm telling them, no, I won.
Yeah, absolutely.
Actually, my bot won. My bot beat you guys.
That's awesome. All right. So last kind of section that I just wanted to jump into real quick. I'm just curious if you see anything from just like a next 5-year window that you're kind of expecting to happen, whether it be like something interesting, whether it be AI, whether it be SnapRent or fintech or real estate. I'm curious if there's something that is just like, burning in the back of your mind. It's like, we got to be ready for this type of thing.
Yes. So I think to start with, I'll talk about real estate. That's what's front and center, for us. These aren't new takes, but they're things that I think that are significant developments that are still not fully clear how everything will go. But office to residential conversions, I know I briefly mentioned that to you and the first time we spoke. Those are becoming incredibly popular in New York City, and I expect them to be popular places like my hometown, San Francisco, where the office culture has not rebounded, or the office economy has not rebounded as much. That is something to look out for in the market, and the types of I would say financing that goes into that, not stuff that we're involved in, but what types of loans are required to outfit a building that was previously purpose built for an office into residential. That's a very interesting space, and a space that's really impactful for these big cities. If you're living in a big city, it's great. It's a great way to provide housing. For example, I think there's a project that's going on with the old Pfizer headquarters that's expected to put out 1,500 units in one building. And if you can do that with one building, it's a great way to build housing. In New York right now, building more housing is the most important political issue. I would also say that single family homes, it definitely gets a lot of bad press, just because private equity always gets a lot of bad press. And I think it's reasonable. A lot of the time, sometimes not reasonable. I'm not going to comment on what I think about that. But one thing to look out for is that, single family homes are being bought up by large firms, and they're going to be a lot more available to be for rent. And again, people really still have this American dream of owning a house. And I don't want people to give up their dreams. I want people to dream hard, dream big, and get there. But like I was mentioning, it really isn't always financially better for you to be buying, even if you are capable. And this significant growth in the industry in single family rentals will be very interesting to see how it has an impact on the economy and on the housing market for purchases.
BlackRock has deeper pockets than you and me. Than literally everybody and every entity out there. So
yeah, definitely. And let's see. That I would say and then for SnapRent as a company, like I mentioned, I'm in love with our flagship product. And I think every founder needs to be in love with what they're doing. And the most rewarding part of my job is hearing from a renter that this was, such an amazing solution for my moving experience. We've gotten things like this, especially for some of the, I'd say, we're trying to expand to affordable housing. It's not our key market, but when we're able to get a renter that has a Section 8 voucher into a house that their Section 8 voucher will cover, but they're not able to cover their security deposit going in, which is not covered by the government. Those people are very thankful, and that's very rewarding for us.
That's awesome.
And that that's our core product. But as we continue to grow, it's very exciting to see what is possible in the commercial realm. We're looking forward to expanding to retail and industrial industries for deposits as well. And also we're looking forward to continuing to innovate different financial solutions that have not been applied to real estate yet, that can help these multifamily rental buildings operate more efficiently. And at the end of the day, if they're leasing more efficiently, that means there's less vacant units for renters, and more renters are getting housed. So, it's a long-term, there's a long road and a lot of possibility for us to be able to, help multifamily rentals be more efficient and be the market that everyone wants it to be, both on the renter and the developer side.
Very cool. I was going to ask about the industrial and commercial point that you just mentioned there, but I was like, if they're going to be renting as a business, I'm sure they have it. I shouldn't make that assumption. So it seems like you're thinking about the same thing. And, there's going to be, I'm sure, there's at least an opportunity there to plug and play in some different instances. So that's very cool. That's very cool. All right. So we're getting to the end here. I have 5 rapid fire questions that I want to throw at you. So first one, I ask a similar question to everybody, just because I love automation, and I'm kind of deep into the woods of AI and automation here. So I'm curious if you could just click your heels 3 times and have one automation just fully built out, ready to go, implemented into your day to day. What would it be?
Newest development that has been released to market, automatically identified. We find our contacts at that company. We identify whether we already have connections with them. We look through all of our sources and see what our strongest connection points are. Whether or not, based on that, we immediately start our reach outs and immediately trigger our campaigns so that we're emailing and calling these people to get in with them. I mean, I think that, a big part of our job right now is sales, and, signal-based sales is and intent-based sales is, the best way to operate. And it's not just for us, it's for them as well. It's kind of like advertising. Everyone hates ads that aren't relevant to them. But they're less bothered by ads that really are relevant to them, even if you don't want to be flooded by them. And we do provide a lot of value for our clients. So, the more signals that we can kind of get automated into our process, the better.
Very cool. Very cool. Prospecting is always a big one when I talk to people. That's awesome. If you were not building SnapRent, what would you be building?
That's funny. That's a great question.
Or even doing. It doesn't have to be building. Maybe even just doing. But
yeah, what would I be doing? I love the idea of an app where you can open your phone and in one click buy your common household goods, and it's kind of like the equivalent of just like those old Amazon Tide buttons. Where you just click the button and you get Tide. But I love the idea. I love the idea of being able to take care of those simple things within 10 seconds.
That's awesome.
Like, hey, I need these things. Boom, boom, boom. I don't have to go through some, and then there's different versions of that. But I love stuff like that. But I think the thing that I really think of when you ask me that question is, I would be actually making a consumer goods company, because marketing is something that I don't have as much experience in. Mm-hmm. And I think that is one of the best ways probably to learn marketing. It's very competitive. Let's make a candle business and see how can we make this candle business successful. And we don't actually use marketing. Marketing isn't a huge aspect in our company when it comes to distributors, like property managers. These guys are not exactly just searching. There's less than 10 signals. They're not just hanging out on the internet.
Yeah, they're not scrolling TikTok all day. Yeah,
exactly. But I think that you're a marketer, and I'm not saying this just to compliment the space that you're in, but I think that marketing is the most challenging aspect of any business. I have a bunch of really smart friends from Stanford, and we all think it's absolutely hilarious how we thought that our ability to create great products was gonna just make great companies. And it's like, no, the only thing that matters is sales and marketing. And we do want to create, just to clarify, we still want to create great products, but sales and marketing is what really makes the ship run. And I think that I would just want to see that's how that's done at the very most basic level. Can you get these candles sold?
Yeah. I mean, you're right. It's very competitive. It's interesting to see how it all plays out. I think you have to have a high level of empathy and emotional intelligence, and kind of understand the psychological nature of it. That's what I like. It's like, oh, this person bought this because of this like slogan, like the most minor switch in how you're approaching it made them start to get more interested. It's very interesting to see how the human mind works with all this kind of stuff. So that's why
I'm a big fan of sales psychology and psychology in general as well. I did a good number of classes. I didn't have to in college about that. And then, but that's just that's more business wise. You know, in the long term, also, I want to be more involved in investing in real estate.
Sure.
That's a more significant kind of venture and requires a lot of capital and requires a lot of time. But at this stage, I would say candle business.
Cool. I like it. All right. Question 3. Do you have any hidden talents?
Music. I can play the guitar and sing pretty well.
And sing. Oh boy. I'm gonna put you on the spot.
I strictly record for my significant other, but I did grow up playing the guitar, and I tried to learn how to sing. Maybe start around COVID about 5 years ago, and you know, doing both at the same time is hard at first, just because you're double tasking. But yeah.
You got a good deep voice. I feel like you can hit some, some like baritones or something like that.
I've heard that. I've heard people. I think I was at an event actually. We sponsored an event at this great building, 25 Water Street. It's actually one of the big residential conversions. I was talking to a guy, and some random guy pulled me aside, and I assumed he wanted to say something about real estate to me. And he's like, "No, your voice. You're just like, your voice is, astounding." And at the time, I think he pulled me away because I was talking to like the CEO of a company we really wanted to work with. Yeah. So I was definitely pronunciating as well as possible. But I have heard that before. So thank you, Cal.
Funny. That's funny. All right. Question number 4. Question number 4. Is there something from your childhood that you're still just like a little too obsessed with today?
Rocks.
Okay.
Rocks. Yeah. I mean, yeah, I used to have books about every single type of rock on the planet and the different, how they were formed. And if I was born with $1 billion, I still probably would be doing what I'm doing now business wise. But I probably would have studied geology in college. I think that's fascinating. Geology and chemistry are really interesting to me. I don't have a rock collection. Very cool. I don't have a rock collection, but I'm a big outdoors guy. And yeah.
I look forward to seeing the SnapRent logo switch into some like stalactites or something like that. Cool. Question number 5. If you could only drink water and one other drink for the rest of your life, what is that other drink?
I have a notification for Kyle.
My Google Home is speaking to me. I don't know if you heard that.
Water and one other drink. I'm a big fan of mezcal. I moved down to Mexico when I was first starting my company. Now I spend a lot more time in New York, but I'm a big fan of mezcal. But you know what? I love a good cup of coffee.
There you go.
I love a good cup of coffee. It would really be unfortunate if I wasn't able to drink coffee. And I think I could suck it up not drinking the mezcal.
Yeah.
So yeah, water and coffee.
There you go. I saw you
drinking a Celsius right now.
I was just gonna say I saw you drinking the Celsius. I'm an energy drink guy myself, so I need to get like Bang or C4 or something like that. Those are my go-tos to sponsor the show. So
nice. They're usually I make my own cold brew. But I'm on the road right now and these are more affordable. And yeah.
Nice. Well, awesome. Jesse, we're getting to the end here. I just want to open forum. Is there anything that maybe we didn't discuss that you want to kind of share with everybody?
No, but of course, I have to give my own company a shout out. I would want to say that SnapRent isn't designed for people that don't necessarily have the cash to move into their next apartment. We're designed for people who don't want to liquidate stocks in a good market, who don't want to pull from their emergency savings. So even if you're successful young professional making above 200 grand, it's a good feeling just to move into an apartment and pay another month's of rent like normal. The hardest part is finding your apartment, and the way we structured our plans is unique in that it's interest only. If you're renting a $4,000 apartment, you just pay $40 a month, and there's no prepayment fee. So if you're just waiting to get your last deposit back or your bonus, it's not as good for us, but you're welcome to do it. And we really want to improve the renting experience. We don't think that it's okay for costs to be keeping people from making their next move. If you want to, if you're living in a bad apartment and you think there are better apartments out there in your rent range that you can move into, we want you to be able to do that without considering the upfront costs. And the whole idea here is making that very affordable on a monthly basis and flexible for whoever you are. So it's really an experience and a feeling that we want to provide for renters in these inexpensive cities, whoever you are.
I love that. Everybody's talking about affordability these days. So love that you guys are kind of contributing and helping out. So if anybody is interested to learning more, Jesse, they can find you on LinkedIn. Jesse Strober. Do you have any other accounts that you like to use? People can check you out or follow.
Yeah, of course, go to SnapRent.com. Check our SnapRent our presence on LinkedIn on SnapRent isn't much, but shoot us a follow. Give our app a try if you're moving. Check out our website, even if you're not moving. Just to get some exposure. And follow SnapRent_official on Instagram and TikTok if you want to see some of the new marketing initiatives that we'll be coming out with this spring and summer. We're going to try to make them entertaining and not so boring. Being a financial service, we want you guys to be entertained and informed. So yeah,
got to stand out. Love it. Yep. Again, SnapRent is at snaprent.com. Jesse, I appreciate you jumping on, man. It's been great to reconnect after a couple of weeks or months ago. I appreciate you joining the Brainiac Blueprint. If you don't mind, look at the camera and say, "Stay brilliant, Brainiacs."
Stay brilliant, Brainiacs.
Awesome. Thank you so much, Jesse. I appreciate it.
Thanks, Cal. Have a good one.
You too. Cheers.
Bye now.